Right, Dipan Mehta also joins into our conversation, so let's get one word from him. Dipan, hi, good morning. A lot of brokerages are now starting to recommend good quality mid-cap names to buy, so looking much beneath the index. What are the stocks that you are telling your investors to put money into?
See, I think the list is ever changing because a lot of stocks are hitting 52 weeks and zooming up. So what was a good buy maybe 2 or 3 days ago has already run up 15, 20, 25% or so. So you need to get it off the list. But by and large, the sectors that we are focusing on is of course the NBFC sector, and I heard Sudarshan also earlier in the show. So second line mid-cap NBFCs look quite interesting. The likes of say M&M Finance or Bajaj Finance, SKS Micro. These are stocks to focus on. Some of the mid-cap private sector banks also could offer very decent returns. The likes of say DCB comes to mind, and even some of the southern based private sector banks like Karnataka Bank and Federal Bank also merit mention over here. So one large basket is of course the NBFCs, and then there are a whole host of engineering companies, of course Larsen & Toubro, not mid-cap but second tier companies, the likes of say Thermax, Cummins India, VA Tech. All these also I think would gain tremendously from the boost which would come to the infrastructure sector and the uptick in the capex cycle. And then the old favorites, the consumer oriented stocks, we have not given up on the FMCGs or some of the other companies which benefit from rising consumer sentiment. Within FMCG, I think the likes of Dabur, Emami, Godrej Consumer also could do much better, considering that demand has been subdued on account of the economic trends. So I think many companies, many sectors certainly have opened up. And as of now, I think there are a few places which investors, or few industries which investors do not like. There is, I think, a multitude of choices over here, ranging from export-oriented companies to domestic-oriented companies. Companies benefit from rising capex, improved sentiment, as well as steady trends in the global market. So, lot is there on offer.
How did you read VIP's numbers? I mean, the margins look disappointing this time around, but the stock has been moving higher.
So I think it's in line with what we were just discussing about rising consumer spending, and VIP certainly falls in line with that trend. So although the results are subdued, but that's the history. And going forward, I think if the overall economic trends do improve, consumption does look up, then VIP and companies like that have tremendous operating leverages. Even 10-15% increase in volumes could translate to 30-40% growth in the bottom line. And it's a relatively well-managed company, hardly any debt on the books of the company, and with its predominant position in the Indian market, in the luggage market, and the brands and all, companies like these tend to benefit when there's an improvement in the overall sentiment of the country. So like this is like VIP, I think there are other companies also will benefit, the likes of say Titan or Page Industries, or even something like a Jubilant Foodworks, which has had a horrible quarter last for the March quarter. But then I think a few changes on the top line immediately will benefit on the bottom line and change the entire sentiment in the stock.
Okay, so Jubilant also is in your buy list.
Well, it's on the watch list because the results were far
a little disappointing, exactly.
And it may have some more ground to cover. Yeah, that's right. But all these companies, give them 3 to 6 months or so, and you will see a complete change in them in terms of their performance, in terms of what expectations are from investors for such companies, as well as in terms of their expansion plans and in terms of their future plans. All of these things can change quite quickly. It's just that the last year or so has been pretty challenging for most of these consumer oriented companies, with urban demand also completely declining, and rural markets also because of the base effect hardly any growth coming through, but that could change quite easily.
Just as Vinod was telling us, infra and banking stocks have been on a tear, Dipan. You gave us a bunch of NBFCs and small banks. Which infra play would you trust? Because when you dig deep down, it's really a huge debt and a very poor balance sheet that most of these companies have.
Yeah, that's right, and you could add corporate governance also to that list, which is what makes us quite cautious. And one would really like some of these road construction companies or these EPC companies per se, because they may be flooded with orders going forward. But then these companies have stretched balance sheets, poor corporate governance standards. Most of them want to dilute their equity, which means that there will be supply of stock. And considering the kind of mess they have made and the returns, or rather negative returns, which they generated over the past 4-5 years, there is an element of fear in investing in them. So my sense is that let's just stick to the large cap companies, the likes of say L&T, BHEL, and Thermax, Cummins India maybe. Then we have this whole host of electrical equipment companies, right from KEC, Kalpataru, even some of the MNCs like ABB, Siemens, Arriva. I think start off with these quality names, and then wait for the mid-cap companies to deliver on all these fronts, be it performance, be it corporate governance, be it managing the balance sheet. I'm sure the winners will come through, and no doubt they may have rallied by 15, 20, 30%. But then, there'll be an element of certainty as far as their performance is concerned, and as far as their, corporate moves and corporate governance and other capital raising plans are concerned. So I don't think we should plunge straight away into the small mid-cap construction companies, and just wait and watch and see what actually emanates and which the winners are, and then gradually increase the exposure to such stocks.
Since the oil and gas space is a hot space to be in, Dipan, I'm going to ask you about MRPL, whether you've seen the numbers. I mean, spectacular set of numbers, but the stock has already rallied, 75% in the last 6 months. Would you put any money there?
No, not really. I think there are so many sectors to track at this point of time, and refining and all doesn't really appeal to us at this point of time.
Okay.
There's a lot of volatility in their earnings, and there's no real story around these stocks at present. There are far more other companies and sectors which look more interesting and more likely to deliver better returns. So I would just give a pass on the sector for the time being.
Think about infrastructure. One subsect of infrastructure, power, is believed to be the NDA government's strong point, at least their performance in Gujarat. How should investors approach that entire space, from power producers all the way down to the equipment makers, the grid guys, the transmission guys, everyone? What do you like?
In my opinion, the best subsector within the power is, I think, the companies engaged in transmission and distribution. I think a lot of capacity has been created on the ground, and the first priority of the government would be to ensure that there is adequate feedstock available in terms of gas and coal, so as to increase the plant load factor of a lot of the capacities. A lot of it have come through the private sector. So a lot of investments, I think, eventually will now start flowing into the transmission companies. And all of these, the likes of say KEC International, Kalpataru, even something like an Apar Industries will benefit from.
So you're not touching any of the
spending on transmission and distribution.
Dipan, you're not looking at any of the Tata Power,
No,
Rail
not
Power,
the power generators.
Okay, none of them.
No, see, generally we prefer companies which have got very high ROIs and ROCs, and with interest rates at the level at which they are and not expected to come off significantly over the next few months. It's better to stick with asset-light companies. So I would not like to go with the power generating companies. There is enough choice in the equipment manufacturers, and there I think they will benefit from increased project execution, better order flow. Some of these companies also have got decent international businesses, so that acts as a bit of a hedge as well. So I would say that yes, power is going to be a priority. But the strategy for the investor has to be to go with the equipment companies, and within that to stick with the companies which benefit from investments in transmission and distribution.